All right, folks, my next guest sees a second spike in inflation, right? So she says these things never just happen as a one-off. Let's bring in Main Street Asset Management, LLC, Chief Investment Officer Aaron Gibbs. So, Aaron, I'm looking at your notes here. Everything is predicated then on the notion that we're not done with this inflation thing.
Yes, exactly. And there are a lot of reasons to say that we're not done with inflation. One, like I've said, historically, we've never had a single spike of inflation. There's always been a second, if not third wave. So the fact that we're expecting just this one time, that we have a new Fed that's become so much smarter, I think is a little unlikely. But also, inflation waves come late stage. That means you've got really low employment, strong GDP, and higher commodity prices. And we've got all three right now. Right. So we are set up. And so now that we have 3 months of increasing CPI reports, we've already seen those hints of even higher inflation in the PPI reports. I think we should be ready for a second wave of inflation. And this idea that we're going to get 3 rate cuts this year, I really think Wall Street needs to throw that out the window. Yeah. And we're seeing that change in the bond market. But again, having that set up with low unemployment, good GDP, higher commodity rates, and having the fiscal stimulus still being piled on, even though we're in this...
It's crazy. I mean,
it's crazy.
Apparently, on one part, they're trying to put out the fire, and the other part, they keep pouring on the kerosene.
And the Fed is
It's an election year, too, so that's not going to stop.
It's not going to stop.
So with that in mind, then, you're saying with bonds, sell the short-term stuff and get some exposure to tips.
Right. So the one thing is, when you have this disconnect where inflation is rising and the Fed isn't acting, during that period, tips actually outperform. Their prices will go up. Yes, you do get a lower interest rate, but it is a wonderful way of protecting and preserving your capital. You basically don't get that bond bear market that we're seeing everywhere else. So until the Fed actually changes their tune, and that probably won't be until another 3 or 4 months, this is an easy layup to preserve your capital.
Got the tips here breaking out too, and it looking pretty good on the chart.
Yeah, and they're all the short terms, the prices are going down, they're going up. So this is a way to save your capital for the next 3 to 4 months.
You mentioned commodities. You have to have exposure to commodities.
Yeah, again, the commodities
is it like, would you do GLD?
Look, I like GLD. I like some of the industrial metals. There's a Bloomberg Industrial Metals. BCIM, which is another option, and using the energy as well. For energy stocks, it's an easy proxy for just the prices of oil that we're seeing as well. So lots of options on getting in there.
What about your stock portfolio? Are you comfortable with everything you have? You're going to ride the wave? I mean, listen, we've been talking all show long. We haven't had a 2% decline going back 100 and some odd trading days.
I would say if you have an overweight in small and mid caps, take the loss. I don't see that coming out of it by the end of the year. So take that loss, put it into something more defensive, because I see basically the safety large cap stocks still being the outperformers for the remainder of the year. I don't see those rate cuts coming in and flipping that change.
Could we actually see a rate hike then? It sounds like you're saying that this bounce in inflation could be enough that forget higher for longer. We may have to actually go a little bit higher, because I've been reading more and more that these rates haven't been restrictive enough anyway.
So I agree. I think the problem is the Fed is so delayed. They want to see a really strong trend where they're looking at like 6 to 9 months. So I don't see them hiking rates by the end of this year. I think that is a very real possibility in 2025. And I know that's not on the dot plots. I know that's not priced into the markets, but I think that's something that people need to be prepared for, because, again, history is telling us that there is going to be a second wave of inflation.
Yeah, you know what? The Fed's going to have a real tricky job then trying to articulate that, even if somehow hits their radar from telling us there are going to be 3 rate cuts to pivoting. But that's been the biggest fear of this market for folks who've been around for a long time.
Yep.
Because it wasn't supposed to be this way. They weren't supposed to be Arthur Burns, and maybe they'll be Arthur Burns. Great stuff.
Thank you, Charles.
Thank you very much. Really appreciate it.